Did you ever imagine that a once booming unicorn, PayTM, could face a colossal downfall? Let's journey back to its inception. In the year 2010, a new player entered India's digital landscape. This was PayTM, an innovative startup initially set on providing a simple solution for mobile and DTH recharging. It was a time when smartphones were becoming a staple in Indian households, and PayTM was quick to seize the opportunity. 4 years down the line, in 2014, PayTM pivoted its business model. Armed with a license from the Reserve Bank of India, it transformed into a fully fledged digital wallet. This move was a game changer for PayTM. It was no longer just a platform for recharges. It was a virtual bank, a financial hub in the pocket of millions of Indians. Then came the year 2016, a year that will forever be etched in the annals of India's financial history. The government's demonetization drive led to an acute shortage of physical currency in the country. It was chaos, but amidst this chaos, PayTM found its golden opportunity. The company experienced exponential growth as millions flocked to its platform for their financial needs. From a humble start, PayTM soon became a household name, a beacon of India's digital revolution. But was this rise to fame short-lived? Let's delve deeper into the story in our next scene. As with any story of rapid success, there were also warning signs along the way. PayTM's meteoric rise wasn't without its fair share of controversies. One of the most significant was the question of data privacy. Was our information really safe with PayTM? Doubts began to circulate as allegations of data misuse surfaced. It was a red flag that many couldn't ignore. Then came the whispers of Chinese influence. Alibaba, a Chinese giant, had made a significant investment in PayTM. This raised eyebrows and instigated discussions about the potential for foreign control. It's a sensitive topic, and the perceived link to China became a hot-button issue for PayTM, but the controversies didn't stop there. PayTM's aggressive expansion into various sectors like e-commerce and banking raised more than a few eyebrows. It was an ambitious move, sure. But was it too ambitious? The company was spreading itself thin, straining its resources and stretching its capabilities. It was a high-risk strategy that had the potential for high rewards, but it also rang alarm bells for those watching closely. The company's relentless pursuit of growth, coupled with mounting controversies, began to cast a shadow over its success. It was like watching a crack appear on a beautifully painted wall. You could ignore it, sure, but once you've seen it, it's all you can focus on. The year 2021 marked the beginning of the end for PayTM, but what led to this downfall? Well, the downward spiral began with a disastrous initial public offering, or IPO, in 2021. The much-anticipated public debut turned out to be a nightmare for PayTM, leading to a significant drop in its market value. The company, once considered a shining beacon in the world of digital payments, was suddenly grappling with a sharp decline in investor confidence. The dream of a massive valuation was replaced with a harsh reality that was hard to swallow. Simultaneously, the competitive landscape was changing rapidly. Other digital payment platforms were springing up, each bringing innovative solutions and aggressive marketing strategies to the table. PayTM, once the undisputed leader in the market, was now facing an uphill battle. The competition was fierce, and PayTM was losing ground. The regulatory environment didn't help either. The Indian government was tightening controls over digital payments and regulatory pressures were mounting. PayTM was under scrutiny, and each new regulation was another hurdle to cross. But perhaps the most significant factor contributing to PayTM's decline was its lack of a profitable business model. Despite its popularity and widespread usage, the company was struggling to turn a profit. The revenue model was fundamentally flawed, and the company was bleeding money. It was a race against time, and the clock was ticking. The downfall of PayTM was not a sudden event. It was a slow and painful process, marked by a series of missteps and missed opportunities. The company that once stood at the pinnacle of the digital payment revolution was now a shadow of its former self. PayTM's downfall was a stark reminder that even the mightiest can fall. But what can we learn from this? The story of PayTM serves as a cautionary tale. It reminds us that success is not just about innovation and market domination, it's also about sustainability, profitability, and the ability to navigate an ever-changing business landscape. The downfall of PayTM is not just a business failure, but a cautionary tale for all aspiring entrepreneurs and business enthusiasts. This tale underscores several crucial points that are essential in the business world. One of the most significant lessons we can gather from PayTM's trajectory is the importance of maintaining focus. In the quest for growth and expansion, PayTM diversified into various sectors. However, this over-diversification led to a lack of concentration on its core business, ultimately resulting in a decline in performance. It's an important reminder that while diversification can be a good strategy, it should not come at the expense of the primary business. Secondly, the issue of data privacy came into sharp focus with PayTM's downfall. In an era where data is the new oil, ensuring data privacy is not just a legal requirement, but also a responsibility. Companies must ensure that they have robust data protection mechanisms in place to prevent breaches and maintain customer trust. Thirdly, managing foreign investments can be a double-edged sword. While they can provide the necessary capital for expansion and growth, they can also pose significant challenges. PayTM's links with China threw it into a whirlwind of controversy and resulted in a negative image. It's a stark reminder that while foreign investments can be beneficial, they must be managed carefully, keeping in mind the political, economic, and social contexts. Finally, the importance of a sustainable and profitable business model cannot be underestimated. PayTM's downfall highlighted that while customer acquisition and market share are important, they are not the be-all and end-all. At the end of the day, a company must be profitable to survive and thrive in the long run. In the end, PayTM's story serves as a stark reminder that in the world of business, the path to success is not always paved with gold. Sometimes it's a rocky road fraught with challenges that can either make or break a company.